Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in, if you find value in this video, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube section. Let's dig in and take a look at Bitcoin's futures, derivatives, and options. Here we have the chart. 4-hour chart on coinalyze.net. I made some remarks here. Price has been trending down and it's pretty much consolidating sideways here. Open interest dipped down and then kind of rising back up, but more consolidating here. But the rise is not much. This is open interest backed by stable coins, and this is open interest backed by coins, which is like Bitcoin or Ethereum, and this one's going sideways. So key here is that it dropped but level off. It dropped, level off, and went slightly up. Combined with down here, this is funding rate, aggregate funding rate predicted, and down here is the actual. Pretty much you can see that here is 0.0085 on the high here, and down here is like 0.005 roughly. It's still within the neutral territory, so not high enough or negative enough or positive enough to have it combined with open interest to have an impact on the price directions. What's important here is demand. Demand continues to drop. This blue line here, that is the aggregate cumulative volume delta. It measures supply and demand, if you will, and it's continuing to drop. And without demand, it might be a bit more challenging to move the price up and sustain it. Let's go to max pain price. Max pain price for the 20th would be 40,000, which is pretty much where we are right now. And the 21st is also 40,000. 25th, which is a day we want to pay attention to because it has high open interest on that day, and it's going to move up to around 41, but that could change because days before that, but more than likely it will stay where it is. This is BTC open interest weighted funding rate. I've explained this in the past. This has a negative correlation with the price. Price is in red. The open interest weighted funding rate, I'll refer to it as funding rate from now on, has a negative correlation with price. Funding rate drops, price goes up. Funding rate goes up, price drops. Price goes up, funding rate drops. So what's important about this chart is you want to pay attention to the zero line here, this line right here. Currently, the weighted funding rate is positive but declining, and if it keeps declining, price more than likely will move up, declining towards zero or even below zero. And so, but it could revert back. For example, if Russia, the FUD with Russia and Ukraine continues or like increases, this might just turn around, go back up. It can go up as high as this level right here, which is 0.0096, because it's down here, which is roughly around 0.0048. So it has some room to go up. It has lots of room to go down. But if it goes down more, price will go up, and vice versa. This is the high block capital liquidation level. We continue to have negative delta, cumulative liquidation delta. This basically means that there are more high leverage shorts, open interest right now. All these levels up here, these are high leverage liquidation levels from 25x to 100x, and that represents this red line here. If you take this area minus the longs down here, long liquidation levels down here, you're going to get this. And it's currently sitting at negative $5.7 billion. Price could easily move up to liquidate these. It did that from here to here. It liquidated some levels. You can see this bubble here. Its horizontal line stopped when the price went up. Another one here got stopped, and another one here. So with little price movement, it liquidated some of these shorts already. but there's a lot more on the upside. Price could continue to go down also with more pressure with the macro environment. But that's a lot. That's a lot of cumulative liquidation levels delta. And if there's no more FUD, price will more than likely move up to liquidate these. When smart money takes they take the long position with a high leverage long position and influence the spot market to move the price up, and then they win on their high leverage position in the perpetual futures. This is the current heat map. You can see that it's got a solid sell wall up here, and that will put pressure on the price to go down. And but that could change. These things change all the time, and that's more than likely a spoof wall right there. You can see a couple other spoof walls. Actually, this one's not. This one's not a spoof wall. Price went down. It stayed, absorbed the sell pressure, and helped move price back up. This wall also here. Part of this wall probably dropped down to here, stayed, absorbed the price, moved it up. Here's another spoof wall. Moved the price up and then disappeared. Let's take a look at a zoomed out view. We can see that we have a buy wall down at 37, a larger buy wall at 36.5, 35 here, 30K here, and we got some lighter walls in between there. But these are the important ones. That looks like we wrapped it up pretty quick. Let's appreciate your time, and if you found value, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube section. I'll see you in the next video later today. Peace.